What do you think it actually costs to build a £50,000 investment portfolio? I recently hit that huge milestone myself, but the number on screen isn't the whole story. So today I'm opening up my books to reveal the real unfiltered number. We're going to look at every single pound I put in, every costly fee I paid, every sleepless night during a market crash, and every penny of profit I've made along the way. In the next few minutes, I'm going to answer all of those questions. I'm not just going to show you a spreadsheet, I'm going to take you on the entire emotional journey from my very first naive investment back in 2020 to where I am today. And just to be crystal clear, the money we're talking about is the cash I've personally saved from my income and chosen to invest. We're not touching my pension or anything else. This is all about what's possible with the spare money you work so hard for. So where does a £50,000 portfolio begin? For me, it wasn't with a big lump sum. It started back in 2020 with just £20 a month into a simple investment app. The stock market was bouncing back after the COVID dip, and I got my first taste of success. After about a year, I'd put in £250 and I'd made my first ever profit of £15. You can see why I had a pretty positive first impression of investing, but here's where the real cost first slapped me in the face. When I looked closer, I saw that a whopping £4.29 had been taken in fees. That single fee took a huge bite out of my profit. While mastering your emotions is actually the biggest challenge of investing, fees are a close second. They lurk behind the scenes, and because platforms often show you returns after fees, they're actually quite easy to miss. My returns weren't as good as they could have been simply because I'd picked an expensive provider. Learning to spot these unnecessary costs has taken a toll over the years, but it started right here. I knew if I was going to get serious about this investing malarkey, I had to make a change. So I learned my lesson on fees, and in 2022 I moved my ISA over to Vanguard, which was much cheaper. I started investing more as my salary grew, and I thought, right, I'm being smart about this now. And then the market took a massive nosedive. At the time, the world was a mess. We had soaring inflation, the war in Ukraine, and supply chain issues. All of the uncertainty spooked the stock market, and I was in for a very rocky start with my new, smarter strategy. This was, without a doubt, the toughest part of my entire journey. I was doing everything right, but when I logged into my account, the numbers were red. About a year in, I'll never forget seeing the numbers. I had diligently paid in $3,686, but the total value of my investments was only $3,441. I was £245 down. It felt like I was carefully filling a bucket with water only to find it had a slow leak. The temptation to just stop, or even worse, to sell everything at a loss was immense. This is where most people go wrong. You have to master your emotions and stay committed to the process. For all my efforts, I was still in the red, but I held firm and doubled down. And then, slowly but surely, more than a year and a half later, after I started with Vanguard, the turning point came. Midway through 2023, my account was finally back in the green. From there, the growth was actually incredible. By January of this year, after paying in a total of £21,011 into that one account, my portfolio was finally worth £25,354. That's a huge £4,343 profit. And that was after paying all the fees along the way. At Vanguard, I was paying a 0.15% platform fee and around 0.18 in fund fees. Over those 3 years, that added up to just shy of £100. It was proof that patience and consistency are your greatest assets in investing. You just have to be willing to ride out the storm. Okay, so that Vanguard account makes up the core of my portfolio, but it's not the whole story. To get to £50,000, there were a few other accounts involved. I experimented with a lifetime ISA, otherwise known as a LISA, through a provider called Doddle. The government gives you a 25% bonus on what you put in, which is amazing, but you can't access the money until you're 60 without a penalty, which I regret. To start this account, I transferred over an existing cash LISA worth £5,517. On top of that, I made new contributions of £1,350. The government then added their 25% bonus to those new contributions, which came to £337. And after fees of around £29, the investment itself made a profit of £384. This journey is never a straight line. Over the last 6 months, the market has been rocky again. My portfolio dropped by around £338, and on top of that, Vanguard increased their fees, which cost me another £50 in just 6 months. This is all part of the journey, but to balance that out, I recently started my new simplified strategy. I invested a final £20,000 chunk, splitting it across 2 new low-cost platforms, Invest Engine and Trading 212. That new investment has already made a small gain of $436. Okay, we've been through the fees, the crashes and the profits. It's time to add it all up and answer the big question. What did it actually cost me to build this portfolio, which is currently worth just over £53,000? I personally saved and invested a total of £48,013. Across all platforms, I paid around £180 in total fees, and my total net profit after all the ups and downs is £4,820. So to build a portfolio that is today worth over £53,000, it cost me £48,000 of my own money. It cost less than what it is worth due to the power of compounding, which is also the reward for your patience. Now, you might be thinking, but surely you have to pay tax on those profits. And that's actually one of the best things about this. Because I did all of this inside an ISA, that entire £4,820 of profit is completely tax-free forever. And while different ISAs have different rules, a key reason I prefer using a stocks and shares ISA for my main investment is the flexibility. Unlike a pension or LISA, I can take this money out whenever I want. That accessibility gives me incredible freedom and security. The big takeaway from all of this is that investing is an emotional journey, but a simple, consistent plan is what gets you through. The first part of this journey, getting to that initial £25,000 through the market crash, was by far the hardest, and yet that's where the bulk of my £4,000 profit was made. If you want to see the original video where I documented that in more detail, you need to watch this video right here. Thank you so much for coming on this journey with me today. If you found this useful, a like is always appreciated. Subscribe for more, and I'll see you in the next one.